If they don't get in on it, they're leaving behind at a top level the biggest revolution that we've seen in the internet and money, and the mix of those two combined, that we will ever see in our lifetimes. This is actually a revolution in technology and a new way of doing things. So it's not just an investment, it's actually a really broad-reaching thing. And that's Bitcoin plus Ethereum and all the other parts of this digital asset network. But in terms of price, if we look at the previous cycles after they halved the supply of Bitcoin, called the halving cycle, happens every few years and it's predictable and forecastable, the price tends to go up 10, 20, 50x. And it would suggest that the price still has maybe another 400% to go, maybe even more this year, right? There's no asset that looks like this. Sure, you can speculate in options in gaming stocks or whatever it may be,
Yeah.
but nothing as a $1 trillion asset class has this kind of upside. So that's the potential that's there. So even if you think, well, what happens if it falls 50%? So 50% is your downside and your upside is 400%. In a longer term, in a 20-year horizon, yes, it is a threat to the dollar. But nobody wants their dollar to go up and down 5% a day, which is what Bitcoin does.
Yeah.
It's not stable. It's a store of value. It's more like gold right now. And its very existence caused the central banks, like the Federal Reserve, to set up their own versions of digital currencies. So it all starts slotting into this new digital world. So they understand that it's there, that people want to use it, people want to save in it, make investments, but they also want to make sure that it exists as part of the system that is already in place, because they want your taxes, obviously. So look, Bitcoin is one thing, which might be this store of value that might turn to money. But there's a whole world of digital assets out there. And many people watching this have seen everything from these digital pieces of art called non-fungible tokens. One of those sold today for $69 million. That's one thing. There's platforms like Ethereum where people are building the future of the internet of value. Mm-hmm. These things have real value. There are also other protocols, tokens, platforms that let all of these different things speak to each other. Like you and I don't know what computer you're on. I don't know what internet provider you're on. And we don't care, right?
Right.
Because it's called interoperability. That whole layer is going to come too. So we're not worrying about Bitcoin. We won't want to invest in it, but if I want to send you money, I don't care how it happens. Or if you want to charge for this video and make it instantly streaming, it may happen over Ethereum, but nobody cares. You care because you get the money at the end of it.
Right.
So there is a huge world of this that's all coming. So I'm a big fan of Ethereum, and I'm a big fan of a lot of these other projects. Problem is when you go further out on the risk curve, you don't know which ones are going to really survive and get the network effects.
Yeah.
But Ethereum clearly has got the network effect. Bitcoin has. This whole space now is 1.7 trillion. If we compare it to the global equity market or global bond market, those are kind of 300 or 400 trillion in size. So you can see how big this can actually get over the next 10, 20 years. Obviously, you don't do things blindly. You have to have a basic understanding of what it is. But none of us understand the technology behind Google. But we own Google shares.
Right.
Because we understand where it's going or what it represents as a business. So if you just think in those terms, what does this digital asset space mean? Well, it means a potential future of the internet of money and the internet of value. If you think, yeah, I get that, this could be really huge. Imagine being able to own a share of the internet. Not Google, but the internet. Or a share of the monetary system. That's what this is. That's how democratizing it is. So it's not like you can own a stock and doesn't that make me feel free and liberated and democratized? No, this is owning a stake of the future. It's something much bigger. It's the most democratic investment I think we've ever had. And it's extraordinary because also people might go, but I can't afford to spend $50,000 on Bitcoin.
Right.
The magic is it goes down to 8 decimal places. So you can put in $10 and you can save $10 every month. or you can save $1,000 every month, or you can buy a whole Bitcoin. So that makes it also democratic, because shares, you can't do that. Fractional shares, they're coming, and some of the platforms like Robinhood have fractional shares, but this by definition is fractional. So it makes it affordable to even the poorest person. Over time, the stock market is reflecting something else, something much more important, which is the rise of central banks and their balance sheets, i.e. the printing of money. Many people talk about, well, it's inflationary, yet CPI doesn't go up a lot,
right?
But people feel poorer. What's going on? Well, the magic is when you move away from using the US dollar as the denominator of something and use the central bank balance sheet, where there's all this excessive supply. So if you divide the S&P 500 by the Fed's balance sheet, what happened is, and this feels like it actually is in reality for all of us, the stock market never really recovered from 2008. It trades in a sideways range, little booms, little busts. And what it's basically saying is almost all of the growth in the stock market is the central bank balance sheet.
Yeah.
The same applies to gold. It's kind of offsets the central bank balance sheet. The same applies to many other things. The only thing it doesn't apply to is Bitcoin. Bitcoin is the only asset that has protected people from the loss of global purchasing power of fiat currencies that have been printed to excess. So that means that if the central banks continue, the price denominator makes it look like the market's rising. So for people who've seen that the Venezuelan stock market once went up, thousands of percent.
Yeah.
But once you take it away from being in Venezuelan bolivars and put it in US dollars, it had gone down. It's the same thing. It's what your denominator is. So that is a bubble in central banking and not a bubble in the stock market. There is a short-term bubble in the stock market. There is the problem. So there is no unwind. So there's their version of the unwind, which is, okay, if we can just keep going and hold this together, then maybe we can get inflation slightly higher, and over time the value of this debt will disappear. Like somebody's parents who had a mortgage in 1970, the mortgage suddenly looks laughable now because inflation got rid of it. So they're hoping for that, hoping they can raise some taxes and hoping they can keep printing some more money to make the ability to pay all this debt back easier. That's their bet. The world is taking another bet, and that's we can build a parallel financial universe at the same time, and we can choose to opt out. And that's what's going on in the digital asset space, and that's what's going on in Bitcoin. It's a whole parallel financial system with borrowing, lending, clearing, custody, transaction, everything is all built on this new universe. And slowly, people are going to migrate across.